Airbnb and Booking.com, two stocks that have got my interest. They are pretty much the same in terms of their business model and the industry that they rely on. Valued at the same, 90 billion each, so they're expensive companies. Pandemic's really affected both of them financially. Yet when we look at the chart for both of them, really, it would say a different story. And so what I'm going to do today is just work out which is the better investment. I'm going to base that on two things: financial analysis and technical analysis. It's the 2nd of July. My name's Tyrone and you're watching Mini Pip. The first thing I'm going to look at is the financials of both of these companies. And now they're valued at the same-ish. I have been tracking these stocks for a few days now, but Airbnb is currently worth 90.2 billion. Booking.com's worth 89.1 billion. Now, actually looking into the financials, I use macro trends to find any of this information out just because the information is straightforward. But because Airbnb has only been public since December, there isn't actually as much financial information as Booking.com. As you can see, Booking.com goes a lot further back. So already there's a lot more information that for Booking.com anyways. But looking at Airbnb first, last year, when the pandemic was at its worst, they were still able to do 3.3 billion turnover, but they did lose $4.5 billion, which is a lot to lose. Now, taking that year out, 17, 18 and 19, you've seen really good growth. So you've seen 2.5 billion, followed by 3.6 billion, followed by 4.8 billion. And again, the company hasn't been profitable. It's a bit of an issue, but, if it's a new company, sort of a unicorn type company, eventually you'd expect this to eventually turn a profit. But I think that this pandemic has really just done some damage to Airbnb and they're going to struggle to come back from it. So when you're valuing a company that's losing $4.5 billion a year, which is more than its turnover, a $90.2 billion valuation is pretty steep in my eyes. So we'll just have to see in terms of what happens. Now, looking at the most recent quarter for Airbnb, they did 886 million in quarter one of this year. So if they continue that up, they're going to be looking at around a $3.5 billion turnover. But again, the problem here is a $1.1 billion loss. To keep that up, they may be looking at around 4.6 billion loss, which again is leaving them $1.1 billion in theory net negative. Now that's never good. And I don't like companies that are losing that type of money. It is concerning. Now, when we look at the balance sheet of Airbnb, it's a similar situation. So, well, actually, it's a better situation. But if you're losing $4.5 billion this year and you're on track to lose $4.6 billion this year, the cash pile is really important part of the balance sheet. So they've got $6.5 billion in cash recorded on the most recent quarter, which is good to know. Then you've got total assets of 12.3 billion with total liabilities at 9.1 billion. So that's leaving shareholder equity 3.5 billion. So they've got positive assets, which is good. That's always good to see. Now that gives them, some investors do this, some investors might not like what I do, but I always look at liabilities to assets and how much debt do they have in comparison to the assets. And so when we look at Airbnb, they have got a ratio of around 73.9%. So essentially, in my eyes, the way I see this is that Airbnb have 73.9% of their assets are actually coverable by the debt. So that's above stock market average, but it's about in line with industry. So when we look at Booking.com, you'll be able to see that it's about the same for Booking.com as well. So overall, the balance sheet, it's fine. You've got more shareholder equity or more positive assets from the previous quarter. So they're growing, and that's good in terms of that. So I'm happy with the balance sheet for Airbnb. But the income statement, to me, it's a serious concern when you're losing or on track to lose $4.5 billion again this year, and the company lost $4.5 billion the previous year. That is really concerning. Now, looking over at Booking.com, there is a lot more financial data that you can see, but similar to Airbnb, which was good, was that revenue was constantly increasing. So if you looked at the last 3 years of Airbnb, it was a constant increase, and it's the same with Booking.com as well. So you've got 12.6 in 17, and you was looking at 15.6 in 2019, and they had increased their profit margins quite a lot. So a 50% jump in revenue saw pretty much almost a double jump in profit after tax, which is really good. So that was good in itself. But again, the pandemic came about. The company got screwed over a bit. Well, the full industry did. And so revenue went from 15 to 6.7, but $6.7 billion revenue is still quite good. And the one thing that I'm very impressed about with Booking.com is that they actually turned a profit, a very small profit, but a profit, unlike Airbnb, which is, to lose $4.5 billion is crazy. And then you've got Booking.com making $59 million in a profit, which is good. Now, looking again, similar to Airbnb, looking at the most recent quarter, it looks like to me that there really isn't much revenue increase, or it's not going to be a great year again. So you've got 1.1 billion turnover in the last quarter. They keep that on. They're going to be doing around 4.4 billion, so it's going to be worse than the previous year. But again, they're going to potentially lose some more money this year, maybe $200 to $250 million, which, all right, it's a loss, but it's not even close to Airbnb. Now, one of the positives when you're comparing both of these companies is if I look at that cash on hand. So if Airbnb, if we just quickly pop back to Airbnb, and you see that essentially you're losing 4.6 billion minus the revenue costs, maybe a $1.1 billion deficit as such. You've got $6.5 billion in the bank. You're sort of leaving yourself 1.1 billion worse off. I mean, they probably will raise money and they'll sell things and do things to increase that cash. That's what tends to happen. But that's a really, really big hit to a balance sheet to lose 1.1 billion, because it's got to come from somewhere. Whereas with Booking.com, you've got 12.6 billion cash, and if they're losing 200 million a year, you've got a lot of years before you need to be considering Booking.com to be even close to going bust. Whereas Airbnb, unlikely that it would ever go bust, but they've got 3 or 4, 5 years, and they could end up going bust if things carried on, say as they are now, which is unlikely. But again, looking at Booking.com, you've got a lot more cash on hand and a smaller loss, which means they've got the money to ride it out, and that in itself is quite good. It's really good. Assets are twice the size of Airbnb. You've got almost 23.6 billion. Total liabilities 18.8 billion. So again, when we're looking at the ratios that I follow, I think that if I work it out quickly, it's so it's 80.2%. Okay, so 80.2%. So liabilities to assets for Booking.com is 80.2%, which is not as good as Airbnb. So overall, Airbnb is better in terms of its positive sort of assets, but realistically, when the income statement when you compare the income statement, Booking.com is just probably going to be a lot better and a lot more of a safer investment from a financial aspect. I feel like, okay, I get that Airbnb has more money, but from financials, definitely it's Booking.com. There's a bigger turnover, and I think that when things return to normal, I know I've used Airbnb, I've used Booking.com. I do actually prefer Booking.com. Airbnb services are good and the platform is good, but Booking.com, it just seems a bit easier, and I feel like I know it better because it's been around for longer. So I do think that Booking.com is the winner of the financials. I think it's pretty evident that Booking.com win the financial comparison here. They've got a bigger turnover. I think they're going to recover a lot stronger than Airbnb, and that's just purely when we look at the income statement. Airbnb was losing too much money. So yeah, Booking.com is the better company from the financial aspect. Now, from the technical aspect, again, Airbnb's not great, and it's partly because they went public in December, and with them going public in December, there isn't actually much technical data that I can look at really. Whereas with Booking.com, I can go back years and see trends from years ago and work out sort of if it's in a cyclical trend or if something's going to happen based on the past. Whereas with Airbnb, there's just not enough information. So as a result, it's very limited. Now, looking at Airbnb, I've been able to get this trend in here, and there is a trend from the May sort of low there, but they went public at 68, and they jumped like 112% to 146 on the day, and they continue to rally to 220. They've dropped from 220. Currently they're down 30%. It was down a lot more. They're down 30% from the highs up here around 220. So based on where it currently sits, what we'd be looking for is you've got initial support at this sort of trend here. So sort of about 148 is where your first support sits. A break below 148 could take you to about 142, which is sort of there. So 142 is next. Further break below 142, you're heading down to this sort of a break of the support, and you're then going towards the initial resistance, which would then turn support again, where you're looking at about 127. Now, a break of 127 takes you further down, and I actually think that around 110 to 100 is fair valuation for Airbnb. That is where I would probably want to get in on this stock, is around 100 to 110. That's where I'd want to be buying. Now, let's just say, given where it currently is and it goes up, if you've got a bounce, you'd be seeing, I do think that it's going to come down to about 148. But if it stays here and it does bounce from here, you're looking at initial resistance at around 180. Okay, so resistance at 180. Break above 180 takes you up to those highs of around 220. Now, issue there is that is a very big increase from 150 to 220, and it is a fundamental aspect that valuing this company at 130 140 billion on a $3-4 billion turnover is just too much. So technicals, there isn't much data, and realistically a $220 share price gives it a valuation which isn't, I don't think is not fair value. It is well overvalued. RSI and MACD, two indicators that I use, there isn't much data on here. So you've got MACD, which is just reading 55, giving it fair value, and you've got MACD, which is just positive, and it turned positive around the end of May. So that's one upside, is that MACD is still positive, though it is leveling out, and eventually what will happen is you'll see the blue line go negative over the red line, and it will fall below like here, and this is essentially just a signal of a resumption of a downtrend where your momentum starts to track negative. I think that this could potentially happen where you get that crossover and you see a further decline down to about 120 a share, which is what I would initially be targeting. I would probably want to be buying around 100 and maybe 110 for Airbnb. Now, looking at Booking.com, because Booking.com has been around for a lot longer, as a result, there is a lot more data. But we're comparing daily time frames here. Now, again, one issue is that your MACD is negative, and you've got RSI reading around 40.4. So with RSI reading 40.4, it's very possible that this is going to roll over back down to the support at 2,100 a share. Okay, so 2,100 is a good potential opportunity to buy this. You've got negative MACD, and I think that if we did fall, you'd see RSI potentially maybe even going to oversold territory. Now, if the trend line doesn't hold, then you sort of want to be aiming for around 1940. A break below 1940 takes this to around 1860. Further break below 1860 takes you looking for 1,580 a share. I don't think that we will get down to that 1,580, which is here. I think that we will bounce on this trend line. If we do bounce, aiming for the highs, sort of 2,500 a share, which is a nice increase of 13%. And then I would actually target $3,000 a share for Airbnb, which is around 36% increase from its current price. I think that's fine. I think that's fair value, to see a 36% increase. I think that it could take 12 months or even 18 months to get that $3,000 valuation. I think that $2,500 is going to be at some point this year. So a 13% increase in quarter three, quarter four of 2021. As things start to open up, I think that demand will increase and on the platform. So I do think that 2,500 is where you want to be aiming for. Now, one of the issues here, just in comparison to the stocks, is that if Airbnb did fall to that level of 110, there could actually be an influx of buyers, because at $100 a share, Airbnb is a lot cheaper to buy for the average person. Whereas with Booking.com, if you've got $2,000 or $3,000 or £3,000 that you want to invest, you don't want to be putting it in Booking.com and just leaving all your money in that one stock. You want to be, sharing your money out. So Airbnb allows you to get into the travel and tourism platform industry at a significantly cheaper price than Booking.com. So actually, Airbnb, technically, I think it's going down. Financially, it's pretty poor, but I think that it could find value at 100, because I think that people would be willing to pay 100 to 120 or even 150. To be fair, people would be willing to pay that because it's cheaper. Whereas with Booking.com, you're looking at 2,000 a share. Not many people will want to just put all the money in Booking.com, but yeah, I think that the risk to reward is probably worth it over Airbnb. I think that 3,000 at some point in the next 12 to 18 months is very possible. So one of the services that we do at MiniPip is we run an analytics company, where we look at all types of market analysis. And we have actually done reviews on Booking.com and on Airbnb. So most recently we've looked at Facebook, we've looked at the NASDAQ, and we've looked at the FTSE. Check it out. There is a link in the description below. We have an Instagram as well. You could follow that. But just keep an eye on what we're looking at. We look at all sorts of markets, short-term, long-term, trading ideas. So, if we look, some of the most recent things that we've looked at was like the NASDAQ. We've got Facebook. We've looked at Airbnb, Tesco's. We've got Sainsbury's, AXT, which is a semiconductor company, SunPower, solar power company. And so there's a lot of companies that we look at. In terms of the YouTube, this is one of the first videos we've done. We're going to continue to do a lot more of these. We're going to do a lot of head-to-heads. We're going to do single analysis. And so obviously, if it's something that you enjoy or that you'd like to watch, please subscribe, and thank you for watching.